listening to Turning Hard Times into Good Times with your host, Jay Taylor. If you have a question or comment about today's show, Jay would love to hear from you at 1-866-472-5790. That's 1-866-472-5790. You can also send an email to questionsfortaylor@gmail.com. That's questions, the number 4, Taylor@gmail.com. Now, back to our program.
Welcome to a special segment of Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me Bob Thast. He's the president and CEO of a company called New Carolin Gold Corp. New Carolin Gold Corp trades in Canada under the symbol LAD. You can buy it down here in the United States under the symbol, on the over-the-counter market under the symbol MDILF. It is currently trading around a nickel in U.S. money, and I've put out in my own newsletter, I've recommended this stock to my subscribers. I've put on a 12-month price target of 10 cents. Would you believe it? 10 cents. Well, there's only 75 million shares outstanding, so it gives it a market cap of around 3.4 million only. And quite frankly, given all that I can see this company has, 10 cents or a double from the current price seems very, very doable to me. So welcome, Bob. I'm really glad you could join me today to talk a little bit about what New Carolin Gold Corp has to offer.
Thanks very much. Yeah, I appreciate it.
You know, I know something about this property many, many years ago when I first started writing my newsletter back in 1982. Actually 1981, but I wrote about a company called Carolin Mines in 1982. And as I recall, that stock got up to $60 a share. And of course, you know, looking back now, we know that that was ridiculously overpriced, but it always had a lot of promise and potential, I thought, and the gold price went down, and so New Carolin, or the Carolin Gold Mines, went out of business ultimately. But mining projects go under cycles, and, you know, people do a lot of work, spend a lot of money, and then the gold price or the mineral price goes down, and then on the upswing, there are people that are fortunate enough to pick up properties and then ride them on the upside. And it's my sense that that could very well be, you know, what you have in front of you here now with New Carolin, which is why I'm excited about your story. You know, you're a good part of the way towards pulling together a very large 144 square kilometer, highly prospective gold property that was part of that Carolin Mines property. This is in British Columbia, I guess not all that far from Vancouver. Can you talk about how much of that landmass that you have assembled, that 144 square kilometer landmass, and how much more you have to gain to pull it all together?
Well, Jay, thanks very much. I was just going to comment on the Carolin going up to $60 a share. There were a few mining properties going into development back in those days, and Carolin certainly showed a lot of promise. And I believe investors were looking beyond the Carolin. Certainly that was the key focus. But I think there was speculation back then that there was a highly prospective gold zone called the Coquihalla Gold Belt, and that this could be a real area of play. So I think that factored into the speculation, if you like. But in terms of answering your question, there is 144 square kilometers right now, a contiguous land package, which is about 28 kilometers long on a northwest trend. It's about 5 kilometers on average wide. And the reason that we went after this property and painstakingly developed it and gathered properties along the way and to fill it in was to capture the 28 kilometers along this Coquihalla Gold Belt, but in particular 28 kilometers of the gold belt that also lined up with what's called the Josemine Fault, which is a major fault system running northwest, southeast, and I think the reason that we did that was obviously there's been 5 previous mines on the property. There's an old saying, if you want to find a mine, the best place to look is under an old mine. But more importantly, there's been another 26 artisan developments over the years, going back to 1885, and I think the biggest return on one of those developments was 130 ounces per ton. There's been several in the 15, 30 ounce per ton. Clearly those are small quartz-hosted vein systems, and those are difficult to get excited about. You know, they're fantastic for old artisan miners. But the Carolin in particular was a disseminated system. And, the average grade there that they mined was in the 4.5, 4.6 gram range. And they, at the time, they felt they had about 750,000 ounces in that grade. Certainly we can't say that that's there under new CIM 43101 standards, but we do have a 43101 for current 43101 resource there, and another new discovery area of the McMaster. But the reason that we went after this property the size that it is because of we wanted to tie up a good part of that Josemine Fault along this belt system.
Mm-hmm. It's my understanding that your property is divided into two. There's the north and the southern part. You have 100% of the southern part, but the Carolin mine was in the northern part, and at this stage you have a 40% interest in that, though you are endeavoring to gain the remainder of that. Can you talk a little bit about how you plan to do that?
Yes. The current status right now is the property itself is evenly split up. We have about 72 square kilometers of it now, including the only road going in there, which we own and maintain. On the northern part, it hosts the Carolin mine and a new zone called the McMaster. The development area is less than 1.5 kilometers, and that's really been the focus of development in the last 30 years up there. But we've got beneficial and legal ownership of 40% of the top part. The other 60% is held by the receiver of Century Mining. We've been working with the receiver to acquire this property over the last 3.5 years, and we now have cut a deal with the receiver of Century Mining to acquire the entire property in exchange for 20 million shares, which would go to the receiver. That we've given them 2.5 already. We will issue them another 17.5 million, which were pegged initially at 10 cents a share, for a total of $2 million for the property and their assets, all rights, titles. And the situation we're in right now is one of the conditions that the receiver we agreed to was that we would raise $2 million to develop the property. And for that, instead of giving the money to the receiver, that money would go to developing the property, and the receiver would be comfortable in taking the shares at that point, knowing that we were advancing the cause. Since we entered into that agreement, we've raised just close to $1 million, and we've done some development work with that. That's certainly added some value. Geological models. We did airborne geophysical studies. We've done a detailed 3D geological model surveying, and we've drilled about 25 holes up there as well. And that takes us up to today. In order to get the other 60%, we have to raise another $1 million. And when we do that, we'll, of course, be able to factor and value the current assets at the Carolin mine and the resources at the Carolin and the McMaster.
Mm-hmm. Now, it's my understanding that there's a tailings pond there. You know, when Carolin Mines, I think they really went into production fairly quickly to try to take advantage of the hot gold market back then, as I recall, and maybe didn't do everything as well as they might have if they had taken their time, and they had very low recovery rates, I believe, and so that means that there's a lot of gold left in the tailings pond outside of the Carolin mine. Is that some resource that you may be able to tap into to help raise money and get going with your exploration and acquisition efforts?
Yes, indeed. Although we've been in a receivership situation, one of the conditions in terms I made with the receiver was that when and if we put the tailings into production, we would give them a 35% share of New Carolin's net on the project. Mm-hmm. So whatever New Carolin makes, we will pay the receiver 35% of that.
Okay.
In answer to your question, more important question is, what's in the tailings? We have a current 43101 resource on the tailings of 28,000 ounces approximately. The recoveries at the Carolin mine were not very good at all when they started. When they first started drilling the Carolin in '75, gold was at $800. By the time they got into production in '82, and the mine was built, gold was at $400, heading for $3, and that's the reason why they didn't do very well and didn't last very long. But I think they took some shortcuts, Jay, along the way, and ultimately their metallurgy wasn't very good, and I'm not sure they put the right mill in there. Clearly, recent work that we've done shows an overall average of over 90% recovery using conventional methods. At the time, I think they put the wrong grind in. They had the wrong mesh. They did flotation, and the recoveries were very poor. They started at 35%, if you can believe that. And we know there's a number of areas in the tailings that were showing 6 grams per ton still in the tailings.
Wow.
We've got an average of 1.3 grams as it sits right now. And we believe that the Carolin, we know that the Carolin milled 85,000 ounces. They only ever sold 44. So although we only have a PEA, a resource estimate for 28,000, we believe that there's more than 40,000 there. And we believe with conventional flotation and a regrind, possibly some gravity separation, that we can recover 70 to 75% of that, make a concentrate, a super concentrate, or a concentrate on site of 3 to 4 ounces, and ship that to a refinery. And there's been a lot of bench testing and metallurgy done, and we are working on an agreement right now to do that, and we're hoping to be successful on that. And certainly would add to our story. It would give us a cash flow scenario and provide us with the opportunity to leverage that cash to not only settle a deal with the receiver, but have more money to work with to develop the property.
Well, that's ideal if it works out that way. And so I guess that would probably be partially an answer to another question I have. What investors might look for as a driver for the stock? I guess if you could come through with some kind of a deal like that could show cash flow coming your way and 100% ownership of the northern part of the property, that would certainly be something that investors might look forward to and might, I would think, could possibly even drive the share price up to my target level.
Well, I think it's a fairly modest target level, but given the world we're in right now and the retail environment we're in, I understand. But certainly from a driver's standpoint, I think if you look at the actual resources we have, they're not booked because we don't own them yet. We do have 40% of them, but you need to have more than 50 in order to do a valuation and actually book some assets on your book. Certainly we're close to doing that. Raising $1 million brings it all together, gives us the ability to value the property. I think it gives us the ability to go to more serious investors who are still interested in gold and believe in it long term. There's certainly a near-term cash flow situation with the tailings, and I believe that a lot of investors want to see that right now, even though this is a brownfield development with terrific assets and terrific upside, blue sky, if you like. They still want to see some meat on the bones, and they want to know you're going to be around tomorrow. And I think that the cash flow story with the current assets, the large land package, a clear geological story that tells us there could be many millions of ounces on this property. We know we've got two resource estimates now. We've got a new discovery zone, which we're going to be talking more about in the market here in the coming months. And certainly we believe that with $1 million of development money, that we can really advance this cause and substantially increase the current resources. And our aim is to prove up well over 1 million ounces under of a mining grade with that money.
Mm-hmm. You mentioned a new discovery. Are you talking about the McMaster, or is there something else?
No, it's near the McMaster zone.
Mm-hmm.
It is part of the McMaster zone, but we'll call it the southern part. All the focus previously has been to the northwest along the fault, but there's a big splay in the fault system, and it sort of ends and then picks up again about 200 meters to the west, and the focus has been to the northwest. And there's certainly been some good holes up there, as high as 47 meters of 4 grams within 50 meters of surface. And there's been some other holes in the 25 meter range, and probably about 41 holes drilled up there to date, but very, very shallow holes because it's a near surface system. And we believe that the system that's heading south-southeast is a new discovery area. There were some holes drilled up there in the southeast direction, all really interesting drill holes. There were 100-meter holes. As soon as they got through what's called the talc schist, which forms a big part of this system right on the fault, it runs for about 15 kilometers. As soon as the drills went through that, they went into mineralization on every hole, and but never deeper than 100 meters. But all of the holes holes intersected gold intersections. I don't think there was a single hole that didn't return gold grades. And the difference between the McMaster zone and the Carolin zone is that the Carolin is about the closest to the surface is about 400 meters from surface. So clearly it was an underground scenario. The McMaster presents a real open pit scenario.
Wow.
And with grades of 2, 3, 4, 5 grams and intersections of 50 meters and more, a whole different economic case. And if this zone runs like the Carolin zone did, then we might have another major discovery on our hands equal to or bigger than the Carolin.
So if your exploration plans then might focus on what? Are you going to be looking around McMaster and the new discovery adjacent to that?
Yes, that's going to be a focus. I think for the sake of the work that we've done, we certainly want to confirm the underground resource and bring it up to new CIM standards in 43-101. We want to be able to have a measured, indicated, inferred resource there. And engineering, third-party engineering, has given us a global resource, and certainly given us, they've seen our 3D geological model and tied it in with all the cross sections, and they now understand what this resource is doing and how it was formed and where the walls are. And I believe that in terms of doing that, I think there's, we're looking at a major resource at the Carolin that is open in numerous directions, and not the least of which is on the track level, just continuing drilling and punching the adits down to track level at 800 level. But we believe that we can expand the resource substantially there while we're confirmation drilling, and third-party engineering has given us coordinates on 11 holes that they want us to confirm. And while we're doing that, we think we'll add to the resource. But the major focus will be the McMaster. And that will be surface drilling, and we hope to start that next spring.
Yeah, and with a whole lot of other territory to look at after you tackle the McMaster, but let's do one thing at a time, I guess. Your background, Bob, I believe is more in the area of deal doing, financing, promotion, that sort of thing, I believe. Is that right? Yeah,
that's correct. I ended up taking the reins on New Carolin a couple of years back at the request of several major shareholders. They felt that it needed a fresh approach, and somebody with a little more background, public company background, to drive the bus while we're in this sort of down market. You still got to raise money. You still have to stay alive. I believe that Carolin is still alive, hasn't been rolled back, is still in one piece because of, number one, the story and the assets. Even though we didn't own it, we were working towards ownership. But more so because we stayed away from any major flow through. We stayed away from institutional investors, and we stayed away from really having brokerage firms own large positions, because we know what happens when those guys exit.
Yeah.
So we built this with on the backs of angel investors and individual investors and relationships, and I think that's the reason we're still here.
Yeah.
So I think it needed somebody in the promotion and money raising and relationship building side and networking side to keep this thing afloat while we're in this fatigue situation for the last several years.
Yeah, indeed. Well, it takes all kinds of skills and talents to actually make a mine, to build a mine and then to make it work. And could you maybe just take a minute to tell us about some of the other people that you have with you that with the technical expertise that might be more boots on the ground?
Indeed, I'm not the man to put this mine into production. I'm not a technical person. I'm a public company person. I've been the CEO of 12 or 15 public companies. I've raised a lot of money, but I've always been smart enough to bring the right people in. I think number one, the geologist that I brought on board, our QP Bob Singh, is the one who modeled this. He's a shale expert. He's the one who drilled Spanish Mountain. He's really added a lot of value, and I believe that he's the right guy to take us forward and really develop this property. In terms of on the environmental side, we've got a former inspector from the Minister of Mines, a mining engineer, spent 21 years with them, and he's now our environmental consultant. I'm just bringing in an ex-Minister of Environment engineer who spent 21 years with them, because we obviously have, we've had an issue out here with tailings problems the last couple of years with Mount Poly. The requirements of and compliance has gone way up. So I brought in a couple of experts in that area to not only indicate to the ministry that we're taking this responsibly and seriously, that but we've got guys on board that can help us and make sure that we're doing the right sort of things at the mine site. And we've got a former metallurgical engineer who's our chairman, Graham Ecott. He's been with the company since day one, and now he does an awful lot of compliance, but he keeps everything ship shape. We brought in Barry Lee as a new CFO. Barry's been working with public companies a good part of his life and has added a lot of value. Got Ken Holmes on the board. Ken's a securities lawyer and a business lawyer. Worked on a lot of mining projects and has been instrumental in helping me put the agreements together and keep the costs down.
Yeah.
So we've got a couple of good people on board, and as we move into a mining situation, I believe that we're gonna prove up a couple of million ounces here or better and sell this to a major. But if someone comes along and wants to put it into production, I'll be standing aside and I'll go back to promoting.
Sure. Well, it's a great story. I think maybe just in summary, Bob, perhaps you could just tell us why. There's so many of these juniors out there. Many of them aren't doing much. They're just sort of treading water. But maybe just in summary, you could tell our listeners why they might do well to put your company somewhere towards the top of the list when they start looking for gold mining companies to buy again.
Well, I think the elevator answer on this is that mine site's 2 hours by freeway from Vancouver.
Mm-hmm.
It is got proximity. It's been mined and logged for since 1885. There's a tremendous amount of infrastructure there, and previous equipment and infrastructure, road infrastructure, heavy road infrastructure. There's a ball mill and a rod mill and a foundation and a coarse ore bin and a permitted tailings impoundment with capacity. You try to build those from scratch in British Columbia today, and you're talking about tens and tens of millions of dollars and probably 10 or 15 years if ever, to get it into production. We've got 10 kilometers plus of underground adits that are dry, accessible. If you were trying to build that today to access the underground ore in a mining situation, you're looking at tens of millions of dollars. And I think if you look at the off-balance sheet value in a mining situation, I think the capex on this thing is 30 cents on the dollar versus a mine somewhere off the grid.
Yeah.
We've got power to the property. We've got water and water licenses and multiple access points. The First Nations community there is a fishing community. They're on the other side of the mountain. They're progressive. They've got a treaty already signed with the BC government. We keep in constant communication there. And I believe that this property is poised for mining. It's poised for development, a multi-million-ounce development. And I think it's very near term. And we've got tremendous assets already. And you look at a $3.5 million market cap with all of that. And I think that's the reason why we probably have got check marks, again, on every single major issue that an investor would be worried about. And, with that said, I think that, we're going to raise another $1 million. And if any of your listeners are even remotely interested, we'd certainly entertain interest from accredited or qualified investors in this quest of ours to get to the finish line.
Indeed, and I would second that. Certainly, if my listeners, accredited listeners out there, are interested in taking a chance at a junior that seems to have tremendous upside relative to its current price, this would be one that I can certainly endorse, and that's, of course, the reason I've added it to my newsletter, Jay Taylor's Gold, Energy, and Tech Stock. So I want to thank you very much, Bob, for spending some time giving us the overview of your story, and I certainly look forward to keeping track of what you're doing. It is an exciting story. It goes back. I'm old enough to remember, this is a recycled story, but actually you've pulled things together in a way, and I think are looking at it in sort of a professional, total manner that has never been pulled together before, and so I'm very excited about this. Thank you very much for being with us, and we'll look to do it again sometime.
Jay, I appreciate that very much, and I just want to add one thing.
Sure.
We're building a business here. This is we have a business plan, and we're executing the business plan. And if investors are remotely interested in looking at the value proposition, they can compare what we've just talked about against anything in the field, and I think we we measure up pretty well.
Well, thank you very much. I like the idea of a business, building a business, as opposed to, say, mining people rather than mining gold. And a lot of junior mining companies have been very good at hanging paper on people. I like companies that can go out and generate real wealth by developing it in the ground. So thank you very much, Bob,
Thank you,
once
Jay.
again.
Appreciate it very much.